Good morning, everybody, and this is your S&P 500 day trade setups for today. So, talk about a volatile move, and just based on CPI data came out 0.3 points above what they were forecasting, and that's what triggered this. So basically what it equates to is the Feds now have a solid case for raising interest rates by between 0.75 and 1%. So, everybody was kind of, data was coming up prior to CPI was all leaning towards the market moving up. And I suspect that some institutions had the wrong information about the CPI. There's a lot of rumors that, CPI has been leaked, that's why the market's climbing, and we're expecting a pretty big decline in CPI. But obviously that was a trap. And then the other side of the coin is we've got quite a few puts in the market for options expiry today. Well, it's not today, it's on Friday or Monday, I think. And those were put in while the market was going up. So obviously there was a theory, me included, that we're trying to trap all those short holders. And guess who's got the last laugh now? Anyway, what we're looking for is opportunity to trade this, and obviously on the 8 hour it's just above the moving average, below. We're still in a downward trend. We had a bullish crossover. We now have we had a bullish crossover. We're now looking at a bearish crossover to be forming at the moment. So actually no, it wasn't bullish, sorry, it was a crossover of the 155. So it's been bearish all along. We're now pointing down quite sharply. So you want to be short, but you want to be short of structure, and that structure is going to have to come in off the lower time frames. Look at the oscillators pointing down. You're looking for shorts. I just don't want to be short. I want to be short higher up. Looking at the 3 hour. Now, 3 hour gives us a little bit of a different picture. We have diversions forming here from this swing low to that swing low. You can look at the oscillators, look at price. Price is higher, oscillators are lower. Oscillators starting to group to the downside. Not there yet, but fairly close. And you can see the break above the 155, no support found. And that's always what you're looking for. That gives you the confirmation of a trend reversal. So trend is down. You got broke above the 155, looking for support here, failed, back down. So the trend continues. So what we're looking for is an area to short off, and the closest area on the 3 hour is up here at 4,000, so 4,017, 4,000. And I've been saying that all week, actually for 2 weeks now. This 4,000 area is very, very important, and there's a lot of significance in there. Right, so looking at the 1 hour, you can see what I mean by people just buying into this over 2 days. CPI is going to be good. Let's trap those shorts. I've got all those shorts that were aiming for 13. They were aiming for 39.60 if I'm correct, and we're already at 39.40. So they were aiming at this area down here, and I think there are a couple that are aiming a lot further down as well. So it's quite a few big volumes aiming quite far down. So a lot of those puts are in the money at the moment. So they'll be gaining a lot of momentum at the moment. So for me right now, short it is. We're looking for opportunity to sell. I don't see anything here on the 1 hour. So I'm just getting some levels for us. There's another level up there, and I suspect that this has been validated. Yeah, so we have broken below this, so that is now a valid level. And then let's just put another one in here. I'm going to use one of these top ones. I think that is probably, that's probably going to be the strongest one. Okay, let's just drop down to 15 minutes here. This is kind of what we need to be paying attention to. Right, so no way you would have got into that there. Only way you would have got into this move is by jumping in, which is not the way I like doing things, but sometimes it is pretty profitable once you jump in and take the risk, especially when you've got a shock move like this, when everything is pointing to a move up, and then all of a sudden there's a shock bit of data that comes in and just drives everything down. So 15-minute oscillators are all over the place, but are moving to the upside. We have moved, basically strong move down. So it's a strong move into a channel, bit of a recovery, another channel. So we are now in a range. For me at the moment, just going to adjust levels. This would be a good area. That's 39.80. 4,000 would be ideal to short off. I don't think we're going to get that high up. So the ones I need to pay attention to are 39.80, 39.65, and then this 39.44 area is also something we need to be paying attention to. So one of many opportunities here. So firstly, we're looking to short off 39.80, and you have a 356 point stop loss. That's to the upside. So I would be a little bit wary about that. I'd probably be looking for the structure and then short the structure. And what I normally do, but you need to be watching this, once all the markets are closed, and for me that's not closed. I mean, once the markets are open in the US and well underway. So for me that would be around about just after 5 p.m. my time. That's a good probably 2.5 hours after the market's actually opened. So then when you'd be looking on the 5-minute, and you look for the structure off, so you look for price action off a level. What it does for me is it gives me the opportunity to have 100-point stop losses. The moves are not as volatile as in the beginning, and then I can actually just structure my entries a lot better. And if you look at this in the 5-minute, there's nothing until this area here at 39.80. So the only other option that you have is a break of yesterday's low and a retest of that. So 39.24, probably down to 3900, bounce, come back, reject one of these tails, and that would be your entry to continue short. Converse story would be we get above 39.80, we build a base, then I would expect us to come back to 4,000 and muck around up here. Okay, anyway, that's kind of my view at the moment. With a massive move like this on the daily, look at that, that's an engulfing bar that has taken out 3.5 days of gains, and also a rejection of the 155 EMA with a crossover brewing here. There's every indication that this is a big cup and handle, that we start dropping below this swing low here. We are looking to come and close this gap down here. Well, first this gap, then that gap. So that's kind of the view that I've got at the moment. Can go either way, obviously, but I think that's the best way to look at this at the moment. Also, from a weekly perspective, because we're between the moving averages like this, this is why you've got this weekly volatility at the moment. So dropping below this validates this big wedge here. And so you can see we're in the wedge at the moment, but if we start getting below this and retest this, you are looking at something really messy. And that is the previous swing high up here. Okay. The other thing, just before we close off, just put a Fibonacci on here for this bigger move, and have a look at that. So we can pull back almost down to 3,100 area, and that would still be considered an uptrend, but we are going to erase. We've almost erased most of the gains of last year, and then possibly get down to start erasing some of the gains of the previous year. Big move down. So that is what is on the cards at the moment. Not looking pretty at all. Not looking pretty at all. Okay. Anyway, that's kind of my view for today, guys. Remember, don't pay too much attention to the long term at the moment. This is what's looking, but we need validation, and that validation is a break of this area here. So for now, pay attention to your lower time frames You're looking to go with the trend. The trend is down. You just want to be shorting up here, or you're going to be shorting a break of the lows of yesterday. Hope that helps, and we will catch up with you tomorrow morning. Cheers for now.